What's up, everybody? This is Jimmy with Trading Decoded. It is September 16th, 2024, and it is 4:34 in the afternoon. The market closed 34 minutes ago. We took a half day today. Why? Because, well, I steadily watched our what was 4 and 5 to 1 win ratio as a community drop to below 2 to 1. And this is because people just fail to accept the fact that sometimes the chart just dies and there's nothing to trade. Yet we're going to sit here and we're going to try and trade it anyway. So my only protection against that, aside from me begging people to not trade until there's a reason to take a trade, is to step away from the microphone. I took a community vote, or at least for the people in my room, and not a single person was against it. So we did it. And hopefully for those of you who voted yes, you walked away with me, because from what I could see through the rest of the day, there wasn't nothing really exciting worth trading. Now, I did come to find that a lot of the people who decided or asked me to keep my charts up in the room open were people that were red on the day, which is also ironic. We oftentimes get this feeling that we can't walk away when we're red, even though we're admitting or openly saying to not just us, the community and themselves, that there is nothing to trade, it's too slow, blah, blah, blah. So what are you doing? Why are you sitting here potentially looking to make your problem worse? Because it might move. Great. Do you have the wherewithal, the discipline and the patience to wait until it does move? Furthermore, have you developed a bias at some point during this time of patience that makes sure you're going to play the move, if and when it does, in the right direction in the first place? These are all questions that elude us when we are in a situation where we don't want to be, i.e., we're down on the day, therefore we'll justify every reason necessary to make us feel better about getting out of that down day. Understandable, right? I get that. But more importantly, you can't see the negative potential effects of doing such. Meaning, if you get in, you make money on your first trade, and you decide to go back in and take a second trade, you'll never think about the possibility that that second trade may not only undo what you've done prior to that, meaning the green you made in your first trade, it could potentially turn your green day red. And then we'll justify why we need to take a third trade to get out of the red, but never stop to think about that it may get more red as a result of doing so. Guys, whether you want to believe this or not, emotions continue to get involved for each additional choice you make during the trading day. Period. It doesn't matter if it's resulting emotions from good trades or bad trades, green trades or red trades, stopped out in profit trades, didn't take max profit trades. I mean, it doesn't matter. All you've done is just started that ball of emotions, and you're going to keep rolling it down the hill until it does something horrible for you. Whether it's blowing up your account, making a very green day very red, we've all done it. As traders, we've all done it, okay? But you have me, if anything, in your corner, especially those of you who are in my community, trying to stop you from falling victim to what I know is causing you to go backwards in the first place. I ask the questions I ask you guys every single day, if not every day, almost every day. So I know what's causing you to be going in the wrong direction. And when you ask me, Jimmy, help me. How can I stop doing this? How can I stop doing that? Have you considered stop trading when you've made your green trade for the day? Well, no, I have a 3-day trade limit. That's awesome. But you took one trade and it was green. What if the other two aren't green? Well, I haven't made my goal for the day. Is trading your day job? If it's not, then you shouldn't have a daily goal other than to be green. Right? Minimize your risk. Protect your profits. Protect your money in general. Taking more trades is not protecting your money. Guys, day trading is extremely risky. That's why most people don't day trade. They invest long term. Long-term investing is a real winner. Unfortunately, a lot of us who are older, 35 and older, can't afford to put enough money away long-term to retire. Okay, so for those of you who are in that boat, like myself, we have to take the risk that is day trading. Okay, but if we're going to take that risk, please minimize or mitigate the amount of that risk by following simple rules. All right, with that, let's go ahead and launch the chart. We'll talk about the opening trade we took, the couple of trades we found after that, and when we decided that we were no longer watch the charts anymore for today. This morning's pre-market wasn't great. Okay, it wasn't great at all. It was a pretty tight range. Didn't know which way I wanted to go. And quite honestly, after putting in higher lows, again, wasn't looking to jump into a trade aggressively right at the open because I didn't know which way it was going to go. I didn't know how to feel. We had no direction in pre-market. So I was prepared for calls because of this higher low. I said, man, if we get this higher low, we'd be looking to get at least to our pre-market high, hopefully to the next target high. Our call line was a breach of 561.90. So if anybody took that on the second candle, I wasn't in that one. Good for you. And I'll tell you why I wasn't in it, because I don't trade against the Qs. You want to see what the Qs were doing at that time? That guy right there. Guys, I know we talk about higher lows are bad for puts and lower highs are bad for calls, right? I tell you guys, if anything, just remember, please, those two rules. Here's another one I'm going to suggest to you, okay? It doesn't work 100% of the time, and it doesn't mean you have to take a trade. Very important. But if the Qs are going down, especially at an aggressive pace, you should be a little bit hesitant in buying calls in SPY or SPX or futures. I'm just going to put that out there, okay? Now, because of what the Qs were doing at open, I chose not to play calls. I made that abundantly clear, okay? More importantly, when the Qs started to close below support levels, I said, guys, I'm looking for puts. I just need the right setup to take them. And the reason I'm looking for puts is because Qs are pushing down aggressively. What wasn't pushing down aggressively at the open was our friend ADD. Oh, crap. I don't know what I just did. Was our friend ADD. It was pushing up. I said, guys, Qs are already pushing down pretty hard. SPY is getting wicky on the top. We recognized this before. That's when I said, I'm ready for puts. Just want to see ADD get weak. Meaning if ADD, this is exactly what I said. With the Qs moving down as aggressively as they are, we just need ADD to start to show a little weakness, whether that's wicks on top or a red candle. That would give me the okay to get into a trade, and I'd be aiming for at least our first target low, okay? Because our put line was right here, which we crossed on this big red candle. We made it to our first target, but at this time, ADD was still aggressively selling off. Qs was still aggressively selling off. I said, guys, we're coming up to a line of support on the Qs, which is this dashed line. You may want to take profits here. Me, I'm going to stay in it because ADD is making me believe there's more room to the downside, okay? Simple, easy to understand. We close below this line of support, and naturally, I am now aiming for 470.08 on the Qs. That's what I would like to see us get down to, which would obviously bring SPY further down so I could hold on to this trade. However, before I decide to hold through this line, I'm going to put a stop loss in profit. What is my stop loss going to be? If the Qs can't stay below this dash line right here, I'm getting out of the trade. Why? Because we broke support. I want that to become resistance, stay resistance. Otherwise, you stop out of the trade. Okay, so at 937, Qs closed, breached above the line at 936, closed above the line at 937. That is here and here. You had the opportunity to get out of this trade. And I told you guys, I told every one of you that we're still holding your puts. I don't like what the Qs are doing. They close above this line. I'd be interested in taking my profits on whatever you might have from those puts. Just a heads up. Now, ADD was still aggressively selling off, even though the Qs weren't. And that's why SPY kind of froze at this level here. But again, as you'll notice, I stopped myself out of a trade because of the Qs, because I don't trade against the Qs. They had found a bottom of support. I didn't know it was going to run back up and take out a new high a day. Did not know that. But I did know that it closed back above a line of support that I needed it to stay as resistance, so we stopped out of the trade. And on that trade, I was 38.8%. Great trade for me. Had people hold on. They stayed in till this resistance. That's fine. We recognize that, hey, if the Qs can hold on to resistance here and ADD keeps going down, maybe this thing will continue back down. However, let's fast forward just a couple minutes past that. We put in a higher low. So if you had held onto your puts to here, hoping for it to come down, okay, fine. What are higher lows bad for? This is whether you're holding on to puts or whether you bought puts at this pullback. Okay, what are higher lows bad for? They're bad for puts. We call it out. Guys, this is a higher low on Qs. Be careful. Now we're looking for resistance to fail, not hold. Lo and behold, 2 minutes later, that resistance fails on the Qs, runs right up to the next resistance, puts in another higher low, breaks that resistance, runs up to the next, another higher low, so on and so forth. Okay? C'est la vie. And around the same time, you started to get ADD moving in the upward direction as well. Okay? So, was there a time to get out of these puts that would have maximized your profits? Sure. Was there a time to get out of these puts before it got really dangerous? Absolutely. Now, why were we looking at calls here? Because everything had changed between the time we crossed the call line here to when we got here. What's everything, you say? Well, at 950, Qs had already taken out their downtrend line and took out a level of resistance. Okay, so at 950, Qs were here with room to go to their high of day resistance, which is the original plan. And ADD started to print up. Okay, everything you'd want to see to go along if playing a break of resistance, our call line, was there. At this point, ADD was starting to show a little bit of red and Qs were tanking. We don't play calls when that's happening. Okay? Furthermore, where did we get out? Well, you made it to and through the next lines of resistance headed up, 9:54 in the morning. Qs were nearing their high of day resistance, closed above it, so you could have held until the next line, closed above that till the next line. And ADD at the same time, right around 9:54, was still pushing green, but with a wick on top. Okay, so the momentum, at least at that moment, seemed like it could have been slowing down, but at the same time, many opportunities to get out of that trade before it became a losing trade. Okay, now it did chop around up here for a little bit. We don't hold through a 10 o'clock candle, so no trades around that time. Got in before 10, got out before 10. Everything's great. Now, we recognize this is the last trade on this chart that we're going to talk about, because after that, it got really uncomfortable. Okay. Last chart, last trade. We recognize, because I was getting asked a lot today about lower highs, higher lows, lower lows, all the things, right? So we went through a whole situation discussing all of these things. So we used it in real time. Guys, SPY's putting in lower highs. Qs are putting in lower highs. We'd be looking for this support to fail, not hold, right? We were talking about this, I believe, is at 1019. So we saw it on the Qs, saw it on SPY. We were waiting for a break of support here, okay, to continue the move down. Because if you look left, you have support there. If you're aggressive, you say, you know what? We got a lower high. I do believe that support's going to fail, not hold. Could have got in there. If you're conservative, you waited for a candle close below that line, which is fine. You could have got in here. Where were we aiming? That's the bigger question. The first support level down is all the way down here at the yellow line. From here, just below this line. There's no support until this yellow line down here. So if you got in here or 1 minute later, your target is all the way down here. Now, why is there an exit here? Because we did find a little bit of support there, but more importantly, on the Qs, I do believe it was lining up with a line of support as well, and it was. So when SPY and Qs meet up at a line of support and or resistance while we're in a trade, that is always a point to consider taking profits. If you want to hold on to that trade, you simply put a stop loss in place, hope that that support in this case fails and that you can make more money. Otherwise, you stop out at a reasonable spot. Okay, it was a decent level of support on the Qs. It did try and hold for a candle. Ultimately, we pulled back and then we broke back through off of a lower high again. Okay, now, why here? Once again, we had made it all the way down. We breached through this line. We're looking for the next line down, which was right here. And I believe at 1034, once again, the Qs and SPY were hitting support levels at the same time. You don't know which levels are going to hold. You don't know which ones are going to fail. What you do know is that when they both get to a level of support at the same time, just think of it as being a little bit stronger than if they're not there at the same time. But what I would say, just like I said at the beginning of this video, if you are having a hard time taking trades that work out for you more often than not, just take your Qs from the Qs. If you got in because of the Qs and you just waited for the confirmation of ADD, or you got out because of the Qs closing above resistance when we wanted it to stay below to continue down, you got out of that trade before it was even going to make you nervous, which was right in here. Okay? If you held on to that trade hoping for more, completely ignoring ADD, completely ignoring the higher lows and Qs, well, you got to eat a big shit sandwich, didn't you? Guys, this is a difficult thing to learn how to do. And it's not because of the technicals, it's because of your emotions. I spend every day on the microphone trying to keep you away, trying to protect you from your emotions. Okay? I know what it's like to be charged with emotion in a trade. It sucks. It's why we cut our winners too short. It's why we hold our losers too long. It's not your inability to understand that the trade is going for you or against you. It's not your inability to understand that, hey, we just ran dead smack into a level of support. Maybe I should consider putting a stop loss in place or taking profits in my puts that I'm up on. No, you understand it because you can see it. You may skew that understanding by wanting more, and you will tell yourself everything that you want to hear to keep you holding on until it's no longer your emotions telling you to hold on. It's now your emotions telling you, man, you held on too long and you can't afford to take this loss. Hold on longer and hopefully it gets better. The old hold and hope, right? So with that, guys, we didn't do much of anything after that. Nothing exciting. You got little patches of movement, but very sporadic. We do have rate hike decision making on Wednesday. I would imagine that tomorrow's market's not going to be a huge mover either, unless some kind of information leaks or anything like that. But protect your capital. You know, when you guys hear me asking you, should we call it a day or walk away? It's not because I want to take a half day or a partial day. It's because I know for a fact that the majority of you, the people in my community, the longer you sit here and watch this chart, even if it's not moving, the more likely you are to take a trade, and it ends up being a trade that doesn't work out for you. Okay? I'm trying to protect you. I made my money this morning. I made my money in the first, 7 minutes of the day? Right? I have nothing to gain by telling you to stop trading when we recognize that there's nothing to trade. But we've all walked away and then saw a big move happen later in the day. And that's the thing that sits in the back of your head that keeps you from walking away. I understand that. I do. Just know that later in the day, it gets more difficult because of theta. If you're red on the day, it gets more difficult because you will tend to hold a trade longer than you should, be it up or down, when you're trying to make a red day green. And then you've already done, for many of you, enough damage to yourselves and your accounts on the day that if a move happens later in the day, What makes you think you're going to play it the right way? What makes you think you're even going to be on the right side of that trade? You are fully a ball of emotion at that point, no doubt, and you're desperate. There is nothing more dangerous than a desperate trader, and I'm going to leave you with that. With that, we're going to wrap it up. Hope you found some useful information in this video. If you did, please like, share, and subscribe. If you'd like to join our Discord community, well, there's a link down below. We'd love to have you. And that's pretty much it. So I hope you all had a fantastic day today. Until next time, tomorrow, maybe. I love you guys. See you.